Well, hello and welcome and welcome and hello and good morning and welcome and hello. It's Happy Hump Day. It's a very special edition of Un Poco Mas. What makes it special? Really nothing. Sofi's up a bit today. I guess that makes it a little bit special. Haven't done a show in a little while. I've just been extremely busy. No, the reports of my demise have been completely inaccurate. I am here. I am alive. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. Would like to thank J Money Not a Lurker for producing the show. Of course, as you know, J Money has gone Hollywood. Every big player in the fintech U-turd space is vying to give him a rose or a wrench, as the case may be. I am turning into the golden. I'm not a bachelor, of course. Princess J is my heart, but I'm turning golden before your eyes with this graying that these, tense and volatile markets are bringing to my facial hair, my temple area. It's very, very troubling, folks. But no, definitely some other people were speculating that I just didn't do a video because the stock was down and I was, shamed because I was, catching cold cards or something. Nothing could be further from the truth, guys. I've been down in this stock through the fours, the fives. In fact, that's why I kind of started this U-turd channel. Was I just thought SoFi stock, I thought it was a crazy opportunity. What I was seeing in the growth and where I thought the eventual margins would go on this thing, which I think 20% is really kind of underestimating things. But welcome and hello and welcome. I just want to sort of revamp my format, keep it a lot tighter. Very few people can watch a show for an hour, particularly a show starring myself. So I'm just going to try to get out more information and sort of less of that un poco mas that you guys know and love. But let me share my screen with you turds. Hello and welcome. Welcome and hello. Thank you for joining me, everybody. Danny Dimes is here. Yes, I do have a job. That's the problem. I've been working like round the clock, guys. Very busy season for me with taxes coming up. My clients need a lot of numbers. Their books are not in order. So I have to kind of go through and, play crisis manager and kind of get, things back in shape. And this is just a very busy season for me. So can't have to keep the priorities in order, guys. U-turd does not pay me one thin dime, though I do enjoy it. So have to keep my eye on my day job here, guys. And keep my eye on the prize because I don't make all that much money, so I have to, make better stock picks, which, again, does not seem like that's been my strength lately. But that's kind of how it goes, guys. You have to stay the course. You have to have conviction. SoFi Technologies, that's what we're here to talk about, not me rambling about my rapidly graying hair or my horrible penny stock picks and things like that. But guys, SoFi stock up 27 cents on the day. Volume is a lot hotter than shorts would like, and that has a lot to do with this call. And again, people are like, analysts don't matter. Don't listen to analysts. Guys, over the short term, day or two, analysts move markets. And this Kyle Peterson and team at Needham came out with, I think, I look at it as more of a tepid buy at $10. I don't see $10 as an aggressive target. You see the vast majority of the credible analysts between, say, that 850 range and kind of a 12, 13, 14 range. The bearish guys seem to be down at 8. Like, I don't think the guys here at, the FUD brothers at KB Fudley at 650 and then his boss over at Morgan Fudley, Midwest Values. I mean, they came out with coordinated 650 calls the first day of January, the last day of January. It was about as formulaic and hackish and phony as you could possibly get. So I don't really think people take those guys very seriously. But Kevin Barker, he actually asks pointed questions. He actually does analysis. I think he's a very serious analyst, and he actually does know SoFi. I put him in the bearish camp, and then, Andrew Jeffrey with Truist, another guy, if you listen to the earnings calls, he's always there. He's always asking questions. He's doing a deep level of analysis on the company. He's probably the best analyst out of all of these analysts that cover SoFi. He's right 2/3 of the time, almost 500 rankings. Trust me, you can go through these guys. You're not going to find anybody smarter, more successful, more insightful, asking better questions about SoFi. The guy knows the stock inside and out. So you can weight things how you want, but he's a buy at $14, which is an 88% upside. You have to just decide, like, who do you think is credible and who do you think is not credible, and then use the market's ridiculous overreactions to these calls to your advantage. If you think, one of these FUD calls, creates an opportunity, you have to just use that to your advantage. Don't try to, complain about it or fight it. Just use it as an entry point, or if you're, a trader, use it to make profits. That's it. So no big deal. What's up, son? How's it going, Alberto? What's going on, everybody? Hope everybody's well. Again, going to try to keep these videos short, just get out more information. I'm going to leave it to Noto Lurker to, answer, put up important comments, and then I'll try to address other comments in future videos. But I really do appreciate everybody's watching. Hope everybody has been well. Kareem is here. M. Russo. All the familiar faces. Matt Flo. Alex is here. Good to see you. Thanks for coming back, Alex. Flint Creek is here. Thanks a lot, Flint Creek. C-Bar Engineering is here, ready to party. SoFi Bull is here. Missed you guys too. Thanks, SoFi Bull. Guys, I haven't been gone that long, and honestly, part of the thing was there was no real compelling reason. I told you in my last video, as the savage of Wall Street could attest, that it was a good time to sell some covered calls for a couple weeks, because the stock, options were saying the stock was going to move kind of sideways in that, sevens range, no real explosion, and then probably, 1 to 2 weeks before earnings, we start to see the stock push up, as it often does. But hello, SoFi. Delicious. I will sell you SoFi tap water at a very high price. I will have it brought in from my personal glacier. Anyway, guys, hello and welcome. Thank you for joining us. It's Un Poco Moss. On behalf of J Money Noto Lurker, it's Danny Deals for Hurricane Lopez, Stock Karen, and the rest of the team here at Un Poco Moss would like to say hello and welcome, and hello, and thank you for joining us. So, guys, I know a lot of you, what you want to see is the short interest, which is, again, just trying to get more information out there. They're shorting heavily today, borrowing 5 million shares already at the net, return share, quite a few shares the last couple of days. Borrowing has gone way, way, way down the last few days, but short interest has maintained fairly steadily, calling it 20% right now on Ortex. Actually, I saw Felix. Felix! Felix! I love Felix, very, very intelligent guy. He was talking, a lot of people have been talking about the things I've been talking about for a long time. These short volume ratios. He did a video on how extraordinary it was the other day. I'm like, Felix, that's nothing. They were pushing this thing up to 75. Now is just a mundane, been around 50. So that is heavy, but it's nothing like what they've been doing. And then if you take a look at institutional ownership, guys, this is tracking around 40%. If you look at it, though, kind of bottomed out here in middle of 2023 and has been pushing up ever since. I would guess we're well into the 40s. And keep in mind, this doesn't include insider ownership, which is, quite significant in terms of the SoFi stock. Again, just trying to bring you guys less of my horrible comedy and more of actual information, data, information about the stock, why things are happening. You can see the institutional put call ratio was extremely heavy on puts. Is not only has the volume increased dramatically, but the calls have increased dramatically. And you see that go up with institutional ownership, has a lot to do with hedging their positions and short long positions. But again, not going to try to go through each one of these filings, guys. There are some hedge funds and stuff, some ETFs selling, but if you look on the balance, guys, more and more and more hedge funds coming into the stock. Almost all of these are increases. Now, there's a few sales here. Again, Capitola, another sale by US Core, but you see them actually buy slightly below here. But the vast majority of these ETFs that you're seeing filings for in the last week and last week, the vast majority are big increases. So I think when, more filings come out 30 days, from now approximately that cover Q1, and you see those, trickle in through the rest of the quarter, I think you're going to see institutional ownership at least in the mid 40s. That's just my estimation based on the way, people think, Aunt Cathie's been in the boxed wine a little bit heavily. She was buying a couple 100,000 shares, I believe, day before yesterday, on Monday, and then bought another 120,000 or something, according to Twitter or Shitter or X or whatever you want to call it. But she was buying, more shares, and she sees it dip into that low sevens. She knows what's going on. She knows where the floor is, and Cathie can read a chart. Again, I didn't recreate these charts. I don't go back and change the lines because I'm wrong. That's, fundamental misunderstanding of how I approach the world. This absolutely doesn't bother me to be wrong. I just try to learn what I did wrong and try to, do better the next time. I'm not going to bury my head in the sand and quit and cry I was wrong. Yeah, who gives a shit? Everybody's wrong all the time. It's how you deal with it. It's how you react to it. This is sort of a life lesson in management and, getting back on the horse. But if you look at this thing, guys, this trend line that was very, very strong resistance, from sort of last July all the way till this thing sort of broke out here and gapped up in December, this line is then flipped to support, and it's held up just fine. This notion that the stock is breaking down somehow and that Sofi is in big trouble, it's absolute FUD. It's absolute nonsense. In fact, it's gone back above this particular support line. So back above sort of this lows from, basically this year. And this wedge, if this wedge can, form in here, the stock is bound to go up before earnings. It almost always does. And, I'll make a point that I don't think a lot of people have been making, and that's that if you look at the stock going into the last earnings, you'll see the price push up right there. That's earnings. You see, obviously, the price go way, way up from, $7.66 to $9, went all the way up to $9.45. But what do you see, guys? Short interest, 13.65%. And that ER wasn't really considered a blowout. I think that was, people who with half a brain in their head do understand that Sofi and Noto sandbag their earnings consistently, and that, they had said for quarter after quarter, we're going to make a gap net profit. I think people who didn't believe them are really, really stupid. Why would they keep saying that and then crash their own stock? And I mean, did they want to accumulate at $2? I mean, possibly, but I just don't think, Noto's trying to do that to shareholders. Noto could grow this company a lot faster if he had no regard for the share price. If, like other SPACs, he was fine to, knock the price down to $2, do a reverse split, kind of freeze the shorts out. Obviously, the shorts would make out like crazy, but again, people are like, oh, Noto's a pumper. Like Gary Gordon is like, hey, Noto's a pathological liar. Why would you trust him? Why would you trust management? Just because they keep delivering and keep exceeding what they're telling you, that's no reason to trust them. It's just, it's just counterintuitive FUD kind of word salad nonsense. But my point is, coming into the last ER, and I keep telling you guys, the stock is going to pump 20% on earnings beat. But what happens? They control the starting line. So if they can convince you that before earnings, the stock is only worth $7.40 and it pumps 20%, that's nothing. It's only going up to like $9. And that's the game, guys. That's the power of the FUD and the narrative and these ridiculous analysts that skew these averages by coming out and saying SoFi's worth $3. I mean, the Chia Pet put out a note just the other day that he increased his estimate for Q4 2025 to like 9 cents or whatever it was. He increased it by 1 cent. And his previous note where he held to $3, he increased his earnings in, I think, Q4 20, whatever it was. I can't remember exactly. But the point is, his last couple of notes where he's been negative on the stock and beating down the stock, he has actually increased EPS estimates for different quarters. Again, because I think the guy knows what he's talking about. He's not, special needs. He's just, in my opinion, disingenuous. In my opinion. I can't prove that. But if you look at this, look what they're trying to affect. It's this average. People look at this. People are dumb. They look at it and they go, oh, that's overvalued. That's undervalued. It's like, but they see this and they're like, okay, they know how these analysts work. They tend to give, the bulls tend to give very optimistic predictions. So, if they can create this narrative, hey, SoFi's worth about $8. SoFi's in the eights. It's kind of, fair valued right now. I mean, Morningstar just cut fair value from 14 to 13, and they're very conservative. Discounted cash flow models, these better guys on YouTube who actually know math and know what they're doing, the professors, the PhDs, they're all telling you the stock's worth $12 to $15. The better analysts that get what SoFi is are telling you the stock is worth at least 10, minimum 10. Look where all the quality guys are. This guy from Deutsche Bank, he's absolutely, he's right on the money. He's at 11. Okay, that's almost 50% upside. And I know, don't listen to analysts. Listen to some of them. Listen to the ones who are good. Listen to the ones who actually do math and understand the macro and understand that SoFi is taking market share from other banks. Okay, and then they're about to be servicing these same banks with software as a service and incredibly high margins. These guys see the vision and they see Noto making it happen every single day right in front of them. They see the incredible competence, creativity of management. They see management's ability to reinvent this company completely over just the last 5 years. These analysts are saying, hey, this is a young company. Don't you get it? That's when you get the opportunity to buy stocks that are tremendously undervalued. If it proves its earnings for 5 years straight and it's just a completely upward trajectory and they keep executing, do you think you're going to get in at this type of bargain? Of course not. That's why if you're like, I don't believe in growth stocks, I'm a value investor, then STFU. Like, I don't understand technology at all. It's a black box for me. Well, listen, you bullum-headed dope. Don't come out and put a strong sell on something you just have no idea what you're talking about. That would be me like coming out and like going, hey, I don't believe in nuclear fusion. I'm going to put a strong sell on these energy companies. Like, I'm not a fucking physicist. I'm a big idiot. And so is Gary. Or I'm a value investor. I don't, It's like he's trying to put a value on Santa Claus. He's something he doesn't fundamentally believe in as a construct, is investing on, future profits, future cash flows, DCF models, these basic things that have been used to value growth stocks for decades. These models, you're like, I don't believe in it. Just calculate the EPS from 2023. It's worth 80 cents. Strong sell. Like, these guys move markets. This nonsense move markets. These smurfs, these bullum-headed, smirking, condescending smurfs. I'm happy to just make 15% on a very safe, no-risk stock. Bullshit. Make 15% on a safe compounding, my fucking taint. Hello and welcome, guys. Hello and welcome. I apologize about that rant. Said I wasn't going to do that, but I lied. I get upset. What do you want me to do, guys? Yeah, Kramer, that catch-all asshole wouldn't have me on. He's afraid of me. The powers that be, guys, they don't want to hear the fucking truth. The truth is, all retail has to do is keep buying these bullshit dips. Here's something I keep hearing, and I'm going to go through this very quickly because I want to just Joe Friday, you guys. I want to say just the facts, ma'am. Guys, this company is fundamentally undervalued. They keep executing. I'm so fucking sick of hearing about Robinhood, this gold card. Everybody's got a damn boner for this gold card like they're sophomores on prom night. What are you guys talking about? A credit card? SoFi makes a partnership with the NBA to be the bank of the NBA, and the market yawns. This is one of the biggest deals I've seen any of these fintech strike, any bank strike in years. And the market is just crickets. Robinhood releases a gold credit card that is going to be a huge money loser for the company. Yeah, it's great for the members just to give away money. People keep criticizing SoFi for that. Oh, that was one of the big criticisms of GG. It's like, well, they're paying for these customers. They're paying too much. Like, what do you think happens? Where do you think it comes from if you give 5% cash back? Where do you think it comes from if you just give all these bonuses? This is not happening in a vacuum. It's not creating money. This is going to be a huge money loser for Robinhood. And let me point out something about this huge turd of a company. And that's exactly what it is. And I know some of you guys use Robinhood, you love Robinhood, and that's just fine. Okay, but look at Robinhood's revenue since 2020. They were already at $1 billion, $1.8 billion, $1.3 billion. Okay, 2021, of course, this was kind of an anomaly. They lost $3 billion, $1 billion, lost 540. And I know they have a pile of cash. I know it's apples and oranges. I get all that. But as companies scale, debt of $3 billion or cash of $6 billion is not going to matter, because down the road, when you do these DCF models, it all comes out in the wash. That's why EBITDA is an important metric for a company like Sofi. Look at the quarterlies, guys. Absolutely flat. 471 million, 470, 486. They're making 25. They're losing. They're making 30. Okay, this company has a valuation of 17 billion. SoFi's sitting at 7 billion. SoFi's making more revenue. I guarantee this year SoFi's going to make more profit. This product is a huge money loser from an investor standpoint. It might be good for growth. It got a hell of a lot of press that it really didn't deserve. But what, and you ask yourself, why? Why? Because it's all a fugazi. It's all a fugazi. Go to Robinhood. Why would this have 78% institutional ownership? I mean, Vanguard is the leading owner of this thing. Ironically, a company called Galileo, second leading owner. But Vanguard's also the leading owner of SoFi. They own the same percentage as SoFi they own of Robinhood. But the rest of these funds, like, so the market is pushing Robinhood up artificially, and the narrative follows. I mean, why does TV, every interviewer, every blogger, why do they fall all over themselves about this credit card and this sort of, this poor man's Elon Musk or poor man's Steve Jobs routine this Vlad sack of shit is doing? This Pert Plus infomercial. I'd rather have like Luke Wilson out there like, oh, I'm really, It's just bullshit. This credit card. It's like, oh, and our app lets you move. I know people love Robinhood for investing. I know it's very good, but this payment for order flow, they're selling your data so that then market makers can use it against you, short your own stocks. It's not sustainable. I know SoFi uses payment. I know all these guys, they've created this model that free trading is good. Free trading is not good. Retail investors, they know what this does. That's why Robinhood builds their app to look like a fucking slot machine, to look like a casino app, to look like, one of the sports betting apps, to look like DraftKings or one of these. Because they want you on there all the time, addicted to making these trades. That's how you lose money. Trading too often, being emotional. Robinhood is bad for people. It is not letting them save money. That's how they're able to sell your soul, your information, your very essence to these data brokers, these scumbags. That's why they turn off stocks when retail is making too much money. And their short hedge fund masters, Seth Rogen, is getting kicked in his balls. Oh, let's just turn off the stock. Oh, we had a glitch. Yeah, we needed liquidity. Yeah, we needed liquidity. Why? You're the exchange. The counterparties. It's the hedge fund getting killed. The hedge fund was going to go out of business. Didn't cover their position because they're too arrogant. It happened a lot like the movie showed. Oh, sorry. I apologize on Vlad's behalf, Flint Creek. I apologize to all the children. But guys, when you look at why SoFi is a $7 billion market cap and Robinhood is a $17 billion market cap, when Robinhood is a complete inconsistent mess that doesn't make any money with completely inconsistent growth, subject to the whims of the market, why do they have 80% institutional ownership and SoFi has 40%? It's because they chose SoFi a long time ago and they made a bad decision. But they, being a market maker, being a short means never having to say you're sorry. And they don't change, and that's just kind of the way it is, guys. They're just not willing to sort of let go of a stock and cover. Remember, they had the opportunity to cover their short in the 4s and the 5s multiple times now. This stock has been traded sideways now for 2 years. That's what I'm telling you. This thing is going to leg up. This is not a pattern where it legs down again. Look at this. Do you have shit for brains? It broke down here 2 years ago. Tested this twice, broke through, and it's been riding this trend line. This is like a seesaw. This is a balance. It changed right here in December. It's still going to go up, you dummies. This chart is not bearish. It's not bearish. It's not going to leg down from here. This is not a plateau it's going to leg down from. Trust me. This is not how this works. They keep banging it off the support. It's gapped down thrice for no reason. They do not want to let retail win. They want to bang you out of this stock, and they realize the low sevens is the best they're going to do to get capitulation. These things don't work. They're not getting any consolidation at the top. They're trying. Here's what they do. They create a false shelf. They create some false support for a few days that they're holding up to suck in a bunch of retarders. Then they crash the stock here, just like they did on May 5th, and they get retarders stopped out. And look at the spread they're making, guys. From $9 down to $7.40 on a convertible note that's really good for the company over time, really good for us over time. I mean, we're going to get diluted anyway. We'll go down the rabbit hole. Brian, that's good. Yeah, I mean, it's a rabbit hole, but I think the numbers are actually there to support it. I think a guy like Felix, who's starting to come on board, I think, even the guys from, SoFi Weekly were basically saying a lot of things I've been saying for a long time, which is that its analysts are lying to create a false narrative that holds the price of the stock. And I've been saying they hold the price of the stock with volume and with shorting. And that's borne out, by everything you see. Look at when they were crushing this thing, trying to hold it down, is back in the high 60s, 70s, the short volume ratio. Now it's, when it goes up, it's, in the 30s, low 40s, settling in that 50 range. That's why I think the stock is trading sideways. Options are telling you it's going to trade sideways. Retarders bought a ton of calls at 750. That's why I just don't think market makers at all costs have to hold 750. That's what they're trying desperately to do. I mean, look at the volume at 750 on these calls. 24,000 contracts. Another 7,000, it's at $8. And the puts, the puts, there's not a lot of volume, but those are at 7. I don't think they're going to be able to drive the stock back down to 7, but that's famous last words. They do that all the time. But if you look at this chart, this setup, how this stock has behaved over time, you see these tests of this trend line, and then it breaks out. Look at these tests, guys. If you think this is only consolidating a little bit to the downside, these upside, these are pumps. It's going to break through this 50-day. It's going to go up through this line. Sure as shit. The line is coming down to meet it. This is going to set up just the same way this set up, and it's going to go up. It's going to leg up. It has to. They keep betting the stock is going to fall apart. They're wrong every single time. That's what the guys from Tanner and Tevis and the boys Roy, they were talking about, are the shorts winning? I think the shorts are winning because the price of the stock went down. I think that's completely the wrong way to look at it. How did they choose SoFi? Okay, first, SoFi was a SPAC. Chamath, I think people on Wall Street believe he's, kind of a hustler. I think they're probably right. And basically he was going to bring whatever he could bring to market. He was going to own part of the company. No, don't like it. Danny Dimes, don't do it. Don't like it. Guys, so, they look at SoFi. They look at the pandemic. When do they start to short this thing? It goes up to 25. It's an easy short at 26, guys. Come on. They're years from making any money back at that time. Look at this thing on the 5-year. I mean, this is an easy short from here. Back in 2021, you get into the pandemic, you short this thing all the way down. Student loans are on pause this whole time. They just churn it. It's easy money. They're killing options. People like Savage of Wall Street are just selling tons and tons of, thank you, Danny Dimes, thank you. They're selling tons and tons of covered calls. They're making money. People who know what they're doing are making tons of money off this sideways movement. Okay, but what do you see right here? The stock moves up off of this bottom in mid-2023, and it never gets back there. They push it down again late 2023, but only get just under 7, guys. That's not enough. Remember, when they were shorting this stock heavily, 680 to 730, the stock increased dramatically. Now, that's why I pointed out over here that going into last earnings, short was only 13. Now it's 20. If they don't cover anything into the earnings and they end up earning, 4 cents, 5 cents, I know you guys think it's impossible, but remember, all those new members from last year, they're all working now. This NBA deal brought a ton of publicity. SoFi is getting more organic brand recognition. SoFi Stadium's working. All these things are working. That golf stadium is coming online. I think people underestimate tremendously the value of student loans. They're saying we are going to get those 3 rate cuts. The student loan customer we bring in are these people who are young, with debt, with advanced degrees, with great careers ahead of them. If SoFi can harness those members and keep them for their lifetime, their value is tremendous. Their value is tremendous. So they picked SoFi during that time. But SoFi was able to turn the corner. SoFi was able to weather the storm and turn it around and come out stronger on the other side. Trial by fire. They were hardened. They came out better. Management proved themselves over and over again, over and above. SoFi management has shown you they are absolutely outstanding, and that comes from the top down. CLP3, my father, Papa Notes, Anthony Noto, my biological father. Guys, this management team is the best in the business. You look at a stock like a firm, like they don't make a firm the market's saying is worth more than SoFi. They're hemorrhaging money. Yeah, they have some pretty decent growth, but that button on Amazon's website is worthless. If it was worth anything, Amazon wouldn't give them that real estate. Amazon can do payments themselves. Amazon can do installment loans. You don't think they have cash? Give me a break. It's not a profitable business. They're just a middleman. They don't do anything. They give installment loans and they sell that off to somebody else. It's a glorified loan broker. They don't do anything. It's check into cash. It's bullshit. Why do you want customers who have to put some mundane grocery purchase at Walmart on installment loans? Jesus, what's wrong with people? That's worth $10 billion? It's like dog poop stuck to your shoe. You're going to give me $10 billion? Vlad comes out with his Pert Plus look, starts shining some shiny gold credit card. Watch out for false prophets, guys. Watch out for things that are too shiny. Watch out for things that are too good to be true. You can't just give money away forever. That's why SoFi's tightening its standards. That's why SoFi's focusing more on existing members, on making profits. They take advantage. When those rates are high, they're getting members. Rates start to come down. They start to worry about risk. They tighten the belt. It's prudent. It's sound. Look at these guys versus somebody like Robinhood. Look at the earnings, guys. I mean, look at this volatility in their earnings quarterly. They're totally flat. If you look at SoFi, this is what you want to see as a long-term investor. Look at this with SoFi. Look at this. It's like a stairway to heaven. Where were you when I made the stairway to heaven? I mean, this was a big write-down, guys. Otherwise, this is beautiful. Minus 47, minus 34, plus 50. I think they're going to make at least 50 million again, guys. We have some extra shares on board, so the EPS, you got to make a little bit more to get the same EPS because they're constantly diluting us. Those motherfuckers. Guys, quarter one is over. Nothing the Chia Five Head said was going to happen came to pass. That money raise was from a position of strength. It was good for us. We get rid of a huge interest expense. What's up, Mike Hill? What's up, Benji? How you guys doing? What's up, Billy Jack? And Billy Jack has something stuck to the bottom of his shoe. He thinks it might be a Chia Pet or a Five Head. He's not really sure. He doesn't have time to bend over and look. The man's working. The man's getting things done. What's up, Katie Wentworth? I'm trying. What's up, Jay? What's up, David Harris? God, I don't know the cost yet, David. We will probably learn that on the 29th at the ER pre-market 5 a.m. Watching the rerun. Jay, Danny Dimes, thank you guys for joining us. Parker Ivy, thanks for joining me. Brian. Brian does not like the stock, but I appreciate you joining me nonetheless, Brian. Timothy going to break. Also wasn't clearing. Yeah, Apex, he's right. Brian's right. I mean, I know that's the story, but there's always a backstory, guys. You got to realize the massive amount of that traffic was coming through Robinhood. all those retail investors were on Robinhood. That was the cult there. So it wasn't like any other brokers turning it off had any real material effect on things. Robinhood's decision, along with the clearinghouse, that's who decided to turn off that trade. I mean, you got to at least acknowledge that, even if you don't like Sofi. Thanks, Forrest. I appreciate you. Flint Creek, obviously. Himothy J. Thinboo does seem like strong resistance indeed. Guys, not a lurker, thank you, Kareem, Himothy, Parker, not just JR, Benji, Daniel Went, of course. Anybody else I missed, I do apologize. Again, Danny Dimes, Piner 74, Emilio, Alberto, of course, Benji, Hockey Rink is here, Andrew Choi is here. Thanks, Andrew. I wish I had time to read all of your comments, guys. I'm just completely out of time. Mattis, thank you for joining us. Russell K, DVD, Hockey Rink, Matt Flo, of course, the great Matt Flo is with us. Guys, I don't really have time to chat at you anymore. I've said what I have to say. The short is still way, way too high. Something has to give. Right now, let me refresh this, just see where we are. 35 million shares traded, stock up 4%, bouncing off of $7.50 yet again. Let's get you an update on the live short interest before we go. Yeah, still at 5 million, so plenty of shares available. 3.5 cost to borrow, still extremely low, which is a bad sign. But when you keep flooding the market with more and more shares through dilution and through stock-based compensation, it's never a good situation. Guys, it's Un Poco Mas. My name's Danny Deals on behalf of J Money, Not a Lurker, Hurricane Lopez, Stock Karen, the rest of the team over here, which is, of course, all of the voices in my head, I would like to say, peace! I'm out of here.